that means the deficits aren't going away, which means demand for financing keeps growing. Repo markets keep getting stressed. Now, on December 1st, the Fed stops QT, which sounds like that might work, right? I mean, stop draining reserves. That way we can stabilize the system. But the problem is the math doesn't work. The Fed's balance sheet is down to $6.7 trillion from $9 trillion peak. Reserves are at about $2.8 trillion, which is barely above the minimum $2.7 trillion level. So stopping QT now means reserves stay flat. That's great. They're at about $2.8 trillion, but they don't go up. You see, you're freezing liquidity at a level that's already stressed. Meanwhile, the government keeps running $2 trillion deficits. So far, volumes are still above the $2.2 trillion a day that demand isn't going away. It's structural. So on one side, reserves frozen at $2.8 trillion. On the other, the government's running $2 trillion deficits every year. And the gap, that's what keeps widening. So if we just stop QT right now, it stops the bleeding, but it doesn't heal the wound. And the Fed knows this. Lori Logan, president of the Dallas Fed and former head of the New York Fed's open market desk, she gave a speech in October. She said, quote, "If the recent rise in repo rates turns out not to be temporary, the Fed, in my view, would need to begin buying assets," end quote. Buying assets? That's QE. That's quantitative easing. That's money printing. And she's not theorizing here. She's telling you what's coming because, of course, she knows the math. Stopping QT won't be enough. When repo stress persists, they'll have to expand the balance sheet. That means QE. But here's the question. Now, the Fed did QE for a decade after 2008, from 2009 to 2020, and inflation stayed around 2%. The stock market tripled, but consumer prices, they stayed flat. So why is restarting QE right now? Why is it dangerous? What changed since then? Well, if we go back to before 2008, the Fed's balance sheet was about $850 billion. And then they launched 3 rounds of QE and ballooned it to $4.5 trillion. We're talking about massive money printing. And inflation from 2010 to 2019, it stayed flat. Now, economists claim that there was no inflation, but the stock market quadrupled from 678 to 3,200, year after year after year of massive gains. So QE did cause inflation, just asset inflation. We saw it in stocks, we saw it in bonds, we saw it in real estate, not consumer prices. But Ben Bernanke, who ran the Fed at that time, he liked this, and he explained, calling it, quote, the wealth effect. Basically, make